Hello and welcome to this special year-ender series, World Economy in 2015. The year 2014 has been full of googlies for economists and for investors. 12 months ago, no one suspected crude will fall 30% and into a bear market this year. Nobody predicted that the commodity cycle, including coal and iron ore and food grains, will all tumble down so much. Some predictions, of course, came right. Several economists had predicted that the US will recover and that Europe could see signs of recession. However, on the East, forecasters didn't quite estimate that the wave of Abenomics will fail to stimulate the Japanese economy. Also, very few predicted that China would slow even below the 7.5% mark and thus cause the unprecedented commodities tumble. Neither did anyone predict the falling global growth and the rising shale gas output will dethrone the OPEC from its status as the final arbiter of oil prices. Our series then is to better prepare us to face the coming year. In the next few weeks, we will get you the best economists from across the world, also former policymakers and regulators, to give us their view of how the world economy may play out in 2015. We start our series today with Dr. Jim O'Neill, former chairman of Goldman Sachs Asset Management, best known for coining the acronym BRICS. This British economist studied oil prices for his PhD and has watched global patterns very closely for over 3 decades now, so the most appropriate man to kick off our series. Jim O'Neill, thank you very much for joining us. Well, for a change, let me start from the East. One of the bigger surprises for global investors this year was the Chinese economy. Not everyone expected it to slow down to 7.5%, and actually the latest number is even lower at 7.3%. What happens in 2015? Does it slow even more towards 7%?
Well, luckily these days I have no professional obligation or pressure to make such forecasts, but what I would say is, so far this decade, China is the only BRIC that has grown by more than I assumed 3 years ago. I have very strong views about what these countries could grow at by the decade. And China's so far growing by, and this is going back since 2011, by about 8%. I expected it to grow by 7.5%. So if China slows below 7%, for a while, I don't think it's a big deal. And I think the Chinese policymakers have broadly told us that they don't think it's a big deal either. And your viewers and listeners have to realize that China growing by 7% has the same global impact as if the US was growing by 4%, or if Japan was growing by 10%. Or if the combined Germany, France and Italy were growing by 7%. And that's how big China is in size. China's going to be $10 trillion at the end of this year. So I don't think it's a big deal if China grows just below 7 or just above 7 for a few quarters. It means their share of global GDP is still rising sharply.
Yeah. To be sure, 7% is a very respectable pace of growth, but commodity traders won't agree with you. For this asset class, a Chinese growth of 6.5% is much, much more painful than a China growing at 7.5%. Hence my question again, do you see China growing even less than 7%?
You know, I'm going to be a typical economist and not really answer you what you asked me, so I apologize. You know, I think a lot of the commodity guys are still stuck too much with what I call the old China model. The bearish case for commodities has been very clear to me now for 3 years. China is focused more on the quality of its growth and not so much on the quantity. And with maybe some exceptions, but not many, that means the huge Chinese demand of the previous decade is not going to keep rising at the same rate. And particularly as you have a supply response in some commodities like oil, I don't know why people would want to be that optimistic for commodities, to be honest.
All right, I will come to commodities in a bit, but let me first finish my growth questions. Let's talk about Europe. The Eurozone is in recession. Now, what does 2015 hold for that continent? Does it recover at least by the second half of 2015?
You know, Europe is the part of the world that concerns me the most. But that said, there are a lot of differences and there's a lot of complications. So if you look at some of the countries that went through the worst of the crisis, like Spain, Portugal, Greece, even the UK, of course, all these places are now growing quite strongly. And if the other parts of Europe were to grow by similar amounts, overall European growth would be a real positive surprise next year. But the problem is you've now got weak growth in three big European places at the same time. Italy and France, of course, and perhaps most importantly and surprisingly, Germany. So the previous crisis places are now showing much stronger growth. But it's the core, or the big core, Germany and France, and troubled Italy that show little. And I'm not sure in Italy and France how you're going to get that changing quickly. And in Germany's case, it's pretty complex.
Yeah, yes, I see your point. But what can be the socio-political ramifications of this prolonged slowdown in Europe? Will there be, disruptive political groups or moves like exiting the euro?
Well, we're having this discussion at a time where there's a lot of focus on additional economic stimulus, particularly so-called QE from the European Central Bank, as well as, interestingly, some talk about infrastructure spending coming from the EU. And of course, as always, when this happens, the markets start to anticipate it. And if it doesn't happen, then I think people are going to be really worried. And so it's very important that the policymakers follow through with the noises that they are making about these things. And if they don't, you could have problems all over the place in Europe. You see the rise of new political parties that this time a year ago, in some cases, didn't even exist. There's one in Spain that's left of centre that literally didn't exist a year ago, and if there was an election tomorrow, they'd be possibly the most popular party. You've had something similar happening in Sweden. And so it's very important that European I kind of like what the Pope said earlier this week, that European policymakers have got to stop being so almost asleep and do something of serious magnitude to try and generate growth. Otherwise, we could have some serious political disruptions.
Well, some level of quantitative easing of QE has already begun. Do you see a more full-blown QE in Europe next year? You know, more asset buying by the ECB and stimuluses by the various governments?
I think it does lie in both of those things. And below the core of it lies this sort of mental thing in Germany that, you know, because of Germany, the ECB has a mandated inflation target of just below 2%, but it's nowhere near there. And the German policymakers should be both really worried and wanting to do things to help get it there. But because of this historic German obsessions with hyperinflation, they don't. And that is a real problem. And they need somehow to be shaken out of that kind of style of thinking.
Yes, that is a tall ask, at least as of now. But let me proceed now to the US. Do you think the US will easily finish this year with a 3% growth and do even better next year?
Well, the US is finishing 2014 on a pretty strong note. Of course, we just had recently the third quarter revised to 3.9. So there's a lot of momentum there. and there's a lot of decent things falling into place. Oil prices declining is probably good for US consumers. So I think there's a pretty good chance you could see 3% growth next year in the US. What I would add, however, is that you have an incredible degree of consensus seemingly about that, which means it makes me worried that there may be some surprise thing that could change that. I don't know what it is, but it's very rare that so many people have the same view as something like this and everybody's right.
Yes, I agree. The consensus is too sure of this, but, well, the consensus has also been right sometimes. In any case, what's your guess of what the Fed will do? Do you think they will hike rates by, say, mid-2015?
Well, until very recently, my expectation is the Fed would be starting to raise rates by the middle of next year. But if you look at actual inflation, measures of inflation expectations, the strength of the dollar, all these things suggest it might be later rather than sooner. And so I'm not so confident about my view on this topic as I would have been literally 4 weeks ago. And so I think it's uncertain. I think that the need for the US interest rates to be so low is clearly no longer so high. And at some point they've got to start raising them. So that makes me think, why don't they start? But against that, if you look at the way the Fed thinks, particularly under Janet Yellen, all the reasons are suggesting keeping them as low for as long as they can.
All right, I'll take that to mean one rate hike in 2015, but not quite sure when. And on that note, let me take a break. Thereafter, we will quiz Dr. O'Neill on commodities. Is the worst over?